Now we will walk through the journal entries used in job order costing. The journal entries reflect the same cost flow process we discussed earlier. We will see entries for direct materials, direct labor, overhead applied, transfer to finished goods, and recording cost of goods sold when a job is sold. First, when direct materials are issued into production, we debit work in process and credit raw material inventory. This reflects that materials are leaving raw material inventory and being used in production. Next, using information off the time cards, when direct labor is incurred, we debit work in process, and we credit either direct labor or wages payable, depending if wages have already been recorded. This records labor as part of the job. Next, we apply overhead to the job. We debit work in process because overhead is part of product costs. We credit manufacturing overhead to reflect that overhead has been applied to jobs using the predetermined overhead rate times the consumption of cost drivers. Once the job is completed, we use the job order cost sheet and transfer total costs from work in process into finished goods. So we debit finished goods and credit work in process. Eventually, when an item that we've produced as part of a job is sold, we record cost of goods sold. We debit cost of goods sold and credit finished goods. This transfers costs out of inventory and into expense. This slide summarizes loss treatment and the journal entry associated. Remember, normal losses are expected and included in overhead. Abnormal losses are unexpected and written off as expense. This matters because abnormal losses should not distort product cost calculations. In the case of an abnormal loss, we generally would credit work in process to pull the item out of inventory. If the item has any residual value, we might debit another asset account, such as maybe an account like scrap parts. The difference is a loss from scrap, rework, or whatever account we're using to describe the type of loss. Now we have a more comprehensive learning activity using Homecraft, a construction firm. You will see multiple jobs and a table showing raw materials, labor hours, and labor costs. A predetermined overhead rate of $75 per direct labor hour is provided. Your task is to compute the cost applied to job number 115 and record journal entries for applying raw materials, applying direct labor, applying overhead, and moving the job to finished goods. Then you will record journal entries to record the sale and cost of goods sold. Finally, you will compute profit on job number 115. This is a great practice problem because it combines cost flows, overhead application, and journal entries. Pause here and work through the activity. Once you've finished, check your answers with the solutions provided in the back of Chapter 3. This slide introduces additional information needed to compute Learning Activity 3.7. This slide introduces an abnormal loss example. Homecraft discovers the roof trusses ordered for job number 116 are defective and unusable. They cost $5,000 and were already posted to work in process. However, they can be sold or reused later at a market value of $2,800. We must remove these trusses from the job. Pause here and work through the remainder of the activity. Once you've finished, check your answers with the solutions provided in the back of Chapter 3.